Hey there fellow traders, welcome to Harmonic Forex. My name is Sneha Dias and today I would like to talk about how to handle a trending market. So if you guys have been actively trading for the last couple of months, you would notice that the trends in most pairs have been very strong. They've literally picked one direction, not the band one direction, but either a bear move or a bull move. And they've just kept sticking with that for the last 3 months. So unless you guys were fortunate enough to maybe short the euro at somewhere around here, or maybe pick it somewhere around here, you would have seen that the market would have run away without you. So it is quite painful when the markets start trending unless you're in the trade itself, which means that you would make an awful load of money. So let's take another example. This is the Kiwi CAD, which is, I guess, quite an unusual pair, but once again, you would see that the market has been consistently falling, and really there has been no respite for the bulls in both these pairs. So the question to you is, what do you do when the market is trending? How do you really deal with such a situation? Well, the first piece of advice I could give is that ride the trend if you were fortunate enough to get in before the breakout happens. Continue to ride the trend until you see that it's completely over and done with. The next option is to wait for retracements to really hit good support and resistance to follow the trend. So hopefully this would happen with the harmonic pattern, which is what we trade at Harmonic Forex, which gives us additional confirmation that it's a good time to go in. Well, the third option is quite controversial. Take a holiday. Don't trade. Wait for the market to be in your favor before getting in again. And the final piece of advice I would give you is do not try to catch the top or the bottom of a market, because if you try to do this, you will die 100 deaths before getting it right. Okay, so let's take a look at action number 1, which is ride the trend. And I guess to a certain extent, you need to be a bit lucky to get in at the right time. And I guess have the knowledge to really hold on to a trade. So let me switch over to the charts and we'll take a look at Euro USD. Alright, Euro USD is at 1.2616. Now, about 1,000 pips ago, which let's see how long ago it was. Approximately 2 months ago, I saw this pattern somewhere here. Now I've got to add this word of caution that I did not get into this trade. It was something that was staring at my face. I wanted to pull the trigger, but I thought, okay, maybe it's a bit too low, so I didn't want to take it. But as you can see, we had a very nice harmonic pattern sitting here, which was basically a down move coming back up and then to short somewhere around the confluence zone. This would have been a risk of about, well, 30 pips maybe. 30 pips, and then I could have just shorted the market and held on. And what would have happened? So let's just say that we shorted the market somewhere around here. And since that day, it's just been a crazy move downwards. It's moved about 1,000 pips, and this is where we are here today. So even on a daily chart, you can't see that line, but essentially this is what you could have done. So you catch one of these trades, your account would be up about 20 to 30%, even if you're risking 1%. But of course, you've got to be quite brave to take these kind of trades, and of course you need to have that conviction that you can hold on to this. So what I would have done is, if I got into this, I would have held on, but I would have moved my stop losses quite proactively to maybe these kind of levels. So first over here, first after that over here, then maybe over to here, so that in case there is a retracement in the other direction, you are kind of safe. But unfortunately, it wasn't really meant to be. So let's go back to the New Zealand CAD example. Okay, let me clear this out. Pretty messy. So this was a trade that I believe we put out to our private client saying that we wanted to short this at a cipher pattern. So let me try and find this somewhere here. I believe it was over here. So once again, you would see a pattern forming somewhere around here, short it at the high, and then just keep on holding. So you would really adjust your stop loss maybe to be somewhere above here, so that if there is a break in the opposite direction, you would at least keep quite a bit of your profits. Action number 2 perhaps is the most practical thing to do. You've got to understand the trend. So make sure that you know whether the pair is moving upwards or downwards, and then wait for a retracement. Wait for it to get to a very good support or resistance level, and then place a trade. Now ideally you would like to see a harmonic pattern forming here, so that you have that additional confirmation that this is a good trade. So once again, let me switch over to my platform, and this was a trade that I entered last night. So how do I know where the trend is? I'll simply switch to some sort of a trend indicator. So if you look at the weekly trends, it's moving upwards. If you look at the daily trends, once again it's moving upwards, although it looks pretty bearish over here. So what I look to do is that, okay, my bias is to long. I'll look for very good turning points in the market. So you could see one over here, one over here. And then I kind of try to look for a harmonic pattern within this mess. So it wasn't very pretty, but I did find something like this, which showed some sort of confluence around this zone. Now what convinced me yesterday to go in was this candle here, where you would see that it's made a lower low, but the RSI was, well, kind of the same, or maybe slightly above. So it kind of told me that, okay, the bears have lost power, and since I'm going with the trend, I would be happy to take this. So stop loss would be below this swing low over here, and then just enter somewhere around here, and we're looking to target, well, at least somewhere here, which is like a 1 to 2 risk to reward. And since it's with the trend, I'm hopeful that maybe it'll reach about 150 pips in terms of profit. So this would be the most sensible thing to do when the market is trending and you really don't have many patterns to play around with. Okay, let's move on to action number 3, which is take a holiday. So as I said, it's a bit controversial, but hear me out and try to understand this thinking. And I feel that this is very important to understand as a trader. Just do a self-analysis. How much do you really need to trade every week? Or do you really need to trade every week? Now, let's assume that you want to make 20% a year. A very realistic target, and also it means that it will make you a very good trader if you can do this. Let's assume that you only want to risk 1%. Your target per trade is 2%. So can you guys do the maths? You want to make 20%, you need to make how many trades to get this done? Well, you got it right. 10 trades per year. Yes, 10 trades per year. So what does that mean? If the market is trending for a couple of months and it does not suit your trading pattern, what should you do? You should just stay away from the market. Doesn't mean that you have to completely turn off everything, but you could be in the market just to look out for what's happening. So the lesson learned is that you can trade once a month and still make 20% an annum. You don't have to be in the market every day. You don't have to go crazy. So the fourth action you can take, well, it is not an action, it's a lack of an action. Don't try to catch the top or bottom of a move, because in a trending market, just follow the trend. Really, if you're trying to catch tops and bottoms, you're not doing yourselves any favors, because you are going to get it wrong more often than not. It makes sense once the top and the bottom is made, let it come back down, you follow the trend and continue to go with the trend until you get it wrong. So you don't believe me? Let's take a look at the charts. So dollar yen, it's been trending like crazy from 101 point, well, from about 102 it's gone up to 110. It's going to hit 110, and my guess is that it's going to break 110 as well. So people might be shorting it at 110, which may make them a couple of bucks, but to me it doesn't make sense. Just keep looking to go long until you're proven wrong. So there would be people, and I've been following certain people signaling systems where they keep trying to catch the top, which looks pretty cool, right? So maybe they'll say, okay, let's short at 105, let's short at 108. Now I'm pretty sure they'll say let's short at 110, and there's nothing wrong with this. You're looking at market structure and you're trying to hope that the price would turn. But guys, at the end of the day, this market is trending very, very strong. So to me, I'll just go down to the H4 chart. I'm going to look for a pattern that will help me to go long. So let's see. Hey, there's a bit of a cipher pattern that's happening here. So let me just fatten this up so that you can see it clearly. And you can see that it's hit 110. Oh, I didn't realize that. Okay, so it's hit 110. I'm pretty sure it will start falling down. But what makes sense is that let's try to go long at 108.80. Stops below here. And then let's try to go all the way back up here. Because why? You're following the trend. How do I know what the trend is? Let's switch over to some moving averages. Beautiful. It makes perfect sense. H4, it's pointing upwards. D daily, it's pointing upwards. Weekly, it's a no-brainer, it's upwards. So just don't try to, I guess, be too smart and try to catch the top or the bottom. As I said, you would get it wrong 20 times before you get it right, and that would mean that you're down 20% before you actually get that move. And psychologically you would be burnt out. You would be like, man, I don't want to keep shorting this market. And when it actually is ready to fall, you guys won't be in the in the trade, so which is quite a sad situation. So with that, guys, I'm going to bring this lesson to a close. I really hope that you understood that when a market is trending, it makes sense to do the 3 items that I listed up before, and please don't try to catch market tops and bottoms. It just does not make sense. So hope you enjoyed this and learned quite a bit around how to deal with trending markets. Until the next lesson, I wish you happy trading and all the best.